Cryptocurrencies' geopolitical role, regulatory shifts, and market dynamics, a comprehensive overview. Introduction. Cryptocurrencies have evolved from niche digital assets into critical tools for geopolitical maneuvering, regulatory innovation, and financial speculation. Recent developments highlight their growing role in sanctions evasion, legislative battles, and market volatility. This article explores how nations like Russia are leveraging crypto to bypass economic restrictions, the U.S.'s strategic reserves ambitions under Trump's administration, and the broader implications of regulatory progress and security challenges. 1. Sanctions evasion, Russia's crypto trade with China and India. Russia has increasingly turned to cryptocurrencies like Bitcoin, BTC, Ethereum, ETH, and Tether, USDT, to circumvent Western sanctions imposed after its invasion of Ukraine. The country's energy-rich economy, particularly its oil exports, faces restrictions on traditional financial channels. By trading through platforms such as Geopolitical, a Russian crypto exchange, the Kremlin has facilitated transactions with China and India, which have continued purchasing discounted crude despite international pressure. While the U.S. Treasury targeted Geopolitical in 2023 for enabling sanctions evasion, Russia's adaptation highlights the limitations of regulatory measures in curbing crypto's cross-border utility. Analysts caution that this trend may expand as more countries explore decentralized finance, DeFi, to sidestep traditional banking systems. 2. U.S. strategic reserves and public opposition. The Trump administration has proposed expanding the U.S. Treasury's Bitcoin reserves, aiming to position BTC as a hedge against inflation and economic uncertainty. However, this plan faces significant backlash. A 2024 poll reveals that 51% of Americans oppose government involvement in crypto, citing concerns over market manipulation and environmental impact. Bitcoin's energy consumption remains contentious. Despite opposition, legislative momentum persists. The Senate Banking Committee advanced bipartisan stablecoin regulation in late 2023, marking a pivotal step toward legitimizing the industry. Critics like Senator Elizabeth Warren argue the bill lacks robust consumer protections, while proponents, including lobbying firms like Coinbase, emphasize financial innovation. 3. David Sacks' divestment and conflicts of interest. David Sacks, appointed as Trump's White House AI and crypto czar, liquidated over $200 million in crypto assets, including Bitcoin and Ethereum, upon taking office to avoid conflicts of interest. He retained stakes in firms like BitGo and Lightning Labs, prompting scrutiny from ethics watchdogs. While the Ethics Office permitted residual holdings under a waiver, parallels were drawn to Elon Musk and Mark Cuban, who retained crypto investments amid regulatory roles. Sacks' actions underscore the tension between public service and private wealth accumulation, a recurring issue as governments increasingly engage with blockchain technology. 4. Trump-Binance partnership rumors, a crypto policy pivot? Speculation surrounds potential ties between President Trump's administration and Binance, the world's largest crypto exchange by volume. Reports suggest negotiations for a strategic partnership, including a possible stake in Binance US and collaboration on a stablecoin venture with Trump-linked firm Meme Index LLC, MI. Binance CEO Changpeng Zhao, CZ, has also reportedly sought a presidential pardon for regulatory disputes overseas. While both parties deny formal agreements, the rumors signal a potential shift toward crypto-friendly policies, including streamlined licensing and tax incentives. Such moves could bolster U.S. competitiveness in the global crypto market but raise concerns about regulatory capture. 5. ECB warns of crypto risks, a Eurozone caution. European Central Bank official François Villeroy de Galhau has cautioned that U.S.-led innovation in non-bank financial systems, including cryptocurrencies, risks destabilizing global markets. He criticized lax oversight for enabling speculative bubbles and systemic vulnerabilities akin to the 2008 crisis. This contrasts with the SEC's incremental approach under Chair Gary Gensler, who advocates for balancing innovation with investor protection. 6. XRP surge and regulatory uncertainty. Ripple's XRP token surged by over 30% in early 2024 amid hopes that a pending U.S. Supreme Court ruling on its securities classification might resolve the prolonged SEC litigation. A Senate bill mandating clear digital asset classifications could further stabilize markets, though uncertainty lingers. Concurrently, meme coins like Dogecoin saw volatility as traders hedged against Bitcoin's downturn. 7. Blockchain over meme coins, Trump's institutional focus. The administration has prioritized institutional adoption of blockchain technology over speculative meme coins, emphasizing use cases in DeFi and supply chain transparency. A 2024 White House summit highlighted partnerships with firms like Chainlink, Link, to integrate smart contracts into government systems. This shift aligns with broader efforts to depoliticize crypto, framing it as critical infrastructure rather than a speculative asset. 8. Regulatory progress, stablecoins and taxation. The bipartisan stablecoin bill, now law, mandates reserve transparency for issuers like Circle, USDC, and Tether, USDT, while the IRS has intensified enforcement of crypto tax reporting. Meanwhile, California's move-to-earn regulations exemplify state-level experimentation with blockchain applications in public services. 9. Security challenges, hacks and infrastructure risks. Despite regulatory strides, cyber attacks remain a threat. A 2024 hack on Luno, a major exchange, exposed vulnerabilities in cold wallet storage systems. Experts urge stricter audits of decentralized platforms, noting that 65% of DeFi protocols lack formal security reviews. 10. Future outlook, global coordination and innovation. As crypto's role expands, international cooperation will be critical. The IMF has proposed a global framework for cross-border digital payments, while China continues developing its central bank digital currency, CBDC. Meanwhile, Ethereum's shift to proof-of-stake in 2024 reduced energy use by 99%, addressing environmental concerns and boosting institutional adoption. Conclusion. Cryptocurrencies are reshaping geopolitics, finance, and technology. While risks like regulatory ambiguity and cyber threats persist, coordinated global frameworks and innovation, driven by both public and private sectors, are steering the industry toward legitimacy. As nations navigate this evolving landscape, the balance between fostering growth and preventing crises will define crypto's future role in the global economy.